Good day, fellow investors. Lithium is getting more and more interesting. 5 months ago, I made this video discussing 5 lithium stocks and gave you a detailed sector analysis. I also told you there that there is a wall of supply coming and it might take a little bit longer for that supply and demand to equalize, but that at that moment it was a negative situation. However, over the coming years, 24, 25, 26, it might get better. So that is a video you must go and watch. I'll put the link in the description below. However, if we look at what has been going on, these lithium stocks now are even lower than 6 months ago, thus the crash is continuing, of course, from the exuberance of 2 years ago. 70% down for Albemarle, and many other companies have seen similar stock trajectories. Now, is this maximum pessimism? That's the key question to check, and if it is, then it is a buy. Let's check the latest Albemarle investor presentation just to get a feeling about what's going on in the lithium world. As soon as you see page number 6 being about diversification, etc., then you know that the sector is in a big downturn, because if it's not in a downturn, then the first pages are about cash flows, profits, and reinvesting. However, now we are talking about diversification, resilience to navigate the negative market conditions, and then also adapting to changing market conditions while maintaining growth. However, when you look at the lithium market, they still estimate 2.5 growth going forward, and here we discussed also in the lithium sector analysis, there is a big difference if the market grows 10%, 15% per year or 20% per year. That would have huge impacts on lithium prices, lithium producers, and everything. However, for now, if we look at their presentations, China is still very positive on it. Europe sales have, let's say, been in line with the past, even if I think that Europe might decline, and that's 20% of global. China is the main driver there, and if China continues, China doesn't have much oil, if China continues, they will drive also the supply and demand for lithium, even if Europe and the US might slow down, especially if there is weaker sentiment, but I'm waiting for a recession. But China, like iron ore, lithium is now a China investment. Also, what they say, that to support the new projects, lithium prices must be higher, $15 per kilo, a little bit lower. Of course, they will have lower costs, thus there should be a margin profitability. However, we don't know, this is the future supply curve, of course. We don't know whether it will stabilize at 10 per kilo or 20 per kilo. And then there is, yes, more growth. Everyone plans to grow. Everyone has the potential to just fill in any kind of demand in the future by just increasing supply. When that happens in a cyclical or in a commodity like lithium, then you can see here sales crashing, profits going down to 2 million from 1.2 billion. 100% down. So the company is not profitable at these prices. Okay, EBITDA, you can adjust whatever you want, but they are not making money anymore. And another video that you must watch, these are the 2 videos you have to watch after this one, is the 6 stock categorizations from Peter Lynch, and he discusses their cyclicals. Cyclicals are bought with negative PE ratios. So now, and we are approaching that with lithium stocks, if you want to look at it now, investments will be lower, and they make outlooks, but maybe it will be even lower. than their estimations. And if we look at prices, reached bottom at the beginning here, jumped a little bit, and now we are going down again, 35-month lows for lithium. However, we can also see lower, maybe not here, because now really the EV demand has jumped. Next in line, what's going on? You can see their capital expenditures already being lowered because it's stupid to just bring more supply for demand that isn't there. Now, everyone says demand will come. When the cycle reverts, you make money as an investment. I have added also this on my research platform. I'm looking at these lithiums. Maybe it will be for my diversified research platform portfolio. But in summary, when I look at it, the lithium demand and supply situation is still a bit negative. There is a lot of supply. Even if they slow it down, it's still above the growth in demand. And there is always this recession in Europe, higher interest rates in the US that will weigh on the demand there. And the savior could be China. But if you look at the potential expansion, this is from Arcadium. So capacity very small, boom, 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 huge capacity increases still in the next few years. And when that happens, maybe it will take a year, 2, 3 years for that increase in demand to be covered by the capacity and for us to see higher prices. And you can see here after the merger, you can see how the stock has underperformed. However, if you look at this, market cap 3.8 billion, and now we have finally the data for the merged company here, you see that equity is 6.1 billion minus goodwill, so let's say 4 or 5 billion of equity, and you can buy that for 3.5 billion. And that's already a measure that you are looking when it comes to cyclicals. Of course, they are also unprofitable, and I will update here on my research platform. I don't know how many videos will I be able to make on YouTube, but if not, just check my research platform. The conclusion is that 50% down compared to 6 months is already better. I don't think we are at capitulation for most investors, lithium producers. They are still investing in that growth because the demand is actually still growing. So now it's already much more interesting than 6 months ago. We are trading below book values. So now the next step, as the earnings, I'll tell you what I'll do. As the earnings come in, I'll go in company by company, production costs, growth, risks there, calculate the cash flows at different lithium price points, and then see when and where we might find a lithium stock with a margin of safety that is a value investment. With negative P ratios, with no profitability, just on that future potential that there are competitive advantages compared to other businesses. This is value investing. Subscribe, smash that like button, check research platform. I'll see you in the next video.